So there's news out that interest rates have just reached an all-time low. And at the same time, Fannie Mae is coming out and saying that they expect the average interest rate for 2020 to be somewhere around 3.2%. But they're also forecasting interest rates to drop below 3% for 2021. And at the same time, you're hearing lenders on the radio, on TV, advertise interest rates below 3%. Can you actually get a rate below 3%? Well, that's what we're going to talk about today, along with when you should consider refinancing, the documentation that is required if you are even considering refinancing, as well as the process of refinancing if you were affected by COVID or the current pandemic and you had a loss of income, or if you actually took forbearance, whether it was on your mortgage, a student loan, or a car payment. Can you refinance? That's what we're going to dive into today. But before we get into it, I want to say that, keep in mind, I'm a real estate broker. My name is Jeb Smith. I'm a real estate broker here in Southern California. I get nothing out of telling you to refinance or not refinance. There's no advantage to me. I'm simply here to provide information. And that's what my channel is all about. It's all about helping buyers, helping sellers, helping homeowners navigate the real estate process, whether it's buying a home, selling a home, refinancing, just trying to make sense of what's out there and help guide you in the right direction. So if that is of interest to you at all and you want to stay up to date, do me a favor and hit that subscribe button and keep up to date on all things real estate related. Let's start today by talking about should you refinance now and take advantage of the interest rates that are currently out there, or should you wait? If you've watched my videos over the last couple of weeks, we've touched on this a number of times and it hasn't changed. If you can take advantage of the current interest rates right now and save money and it makes sense to you, you should take advantage, because we don't know what the future holds, right? While I'm one that believes interest rates could head lower, a lot like Fannie Mae is predicting, I'm also one to know that I can't predict the future. I've been wrong many times in the past with different forecasts. And while I do expect them to go lower, I do anticipate that there could be bumps in the road between now and then. It's not going to be just a straight line down. So if you can save money now every month and it makes sense based on the cost you have to pay to refinance the loan, then I would say take advantage of what's out there. And then if rates do head lower in the future, then there may be a potential for you to refinance further at that time. Now, what I mean by that is, if you can take advantage of a interest rate of say 3% today, hypothetically speaking, and it saves you $400 per month, but it costs you $4,000 to refinance. Well, that $400 that you're saving every month, it's going to take you 10 months to recoup that cost. So if you plan on being in your property for longer than 10 months, then refinancing likely makes sense. Whereas if you're a person that's considering refinancing now, but you think you're going to sell in 3 months, then the chance that you should refinance are slim. It's not something I would consider until you know exactly what you plan on doing. Now, at the same time, you're hearing interest rates on the radio being advertised at 2.5% or 2.75% or whatever the rate is. The reality is you can get any interest rate you want as long as you're willing to pay the fees associated with getting that rate. And that's where, understanding the loan process helps, right? If there are lenders out there that will charge you points to get a rate, and there are lenders out there that will actually do your loan at no cost and get you a rate. So you have to make sense of the situation. Does it make sense to you to get a lower rate, pay no cost, and lower your monthly payment every month to X amount? Or does it make sense to pay more money down by paying points on that loan, getting a lower interest rate, but it costs you higher fees to get a lower monthly payment? In my experience in history, typically speaking, it makes more sense to not pay points and take advantage of the rate that you can get at no cost, just for the sheer fact that if rates do go lower in the future, like they're predicting, you have an opportunity to refinance at that time and potentially save additional money. Whereas if you pay money up front now and rates do go lower and you decide to refinance in the future, chances are you're not going to recoup that money that you paid to buy down the rate initially when you refinance that second time. So that's what you have to consider. You have to take the savings that you're saving per month and weigh it out over what it costs you to do it. Now, in some cases, you're paying off debt. Maybe you're paying off credit cards, you're paying off car payments, you're paying off student loans, and you're saving substantially by paying those items off in a cash out refinance. And so then refinancing or paying points or whatever may make sense because of the amount that you're saving every month in order to take advantage of lower rates. So each scenario is different. And that's why you have to make sure you're working with a professional, working with somebody that can answer those questions, run those scenarios for you, show you the difference in a 15-year versus a 30-year, show you the difference in paying off that debt versus not paying off that debt, show you the difference in paying points versus not paying points. So that's what you need to consider. Now, as I mentioned a moment ago, there are lenders out there advertising below 3%. A lot of them. Now, can you take advantage of a rate below 3%? Absolutely. But, based in my conversations with a lot of lenders out there at the moment, based on conversation with mortgage brokers, in order to take advantage of those lower rates like you're hearing online, there are points involved to buy down that rate. So don't just think that what you hear on the radio is accurate. Have a conversation with a professional and have them run scenarios for you to tell exactly where you stand. Now, this puts us into our next topic that I mentioned at the beginning, is what documentation is actually required if you are looking to refinance. Well, if you have an FHA loan or a VA loan, you still have the option of a VA or FHA Streamline. This is a loan that allows you to refinance without having an appraisal, without providing income documentation, and actually taking advantage of lower rates in a pretty simple process. I mean, there's really no documentation required, so it's a simple process in most cases. Now, there are other loans out there like conventional loans where there are documentation that is required, and the things that you need to be prepared for are what I'm going to list here right now. Whether you're planning on taking advantage of the market right now or in the future, I would tell you to gather that documentation and even have that conversation with the lender now. Provide them with the documentation now so that they can review it, especially if you've been affected by the pandemic and you've had a loss of income for any reason. They can review that documentation and tell you exactly what is needed. But in most cases, W-2s are going to be required. Actually, in all cases, W-2s are going to be required when income documentation is required. Now, if you can qualify simply off your W-2 income and you don't need additional income that comes from a self-employed business, dividends from stocks or what have you, then you don't need tax returns, right? You just can use your W-2s and provide your W-2s in order to qualify with your income. Now, if you are one of those people who are self-employed, or part of your income comes from self-employment, or you use dividends to qualify, or anything other than your W-2 income to qualify, chances are you're going to have to provide tax returns. Most cases, it's going to be 2 years full tax returns. Now, that's personal and business if you're a business. So make sure that you have that documentation readily available, because the last thing you want to do is be ready to refinance, talk to a broker, have the interest rate that you want in mind, it's ready to be locked, and then you don't have the documentation to provide to them to be ready to lock that rate. I say that you should have this documentation up front, already provided, so that when the interest rate gets to where you want to be, a payment that you're comfortable with every month, then you can just lock the rate. The lender already has the documentation that's necessary, and you might just have to update a couple of things. So outside of what I just mentioned there, you're gonna need bank statements in most cases. Now, if it's a cash out refinance, chances are you're not going to have to provide bank statements, but in most cases, or in some cases, you're going to need at least 2 months bank statements of checking, savings, whatever, wherever you have assets, especially if the lender is requiring that you have a certain number of reserves in your account, you're going to have to provide documentation of that. Now, if it's less than 1 month reserves required, then you're not going to have to provide the documentation. Now, this can be confusing, and that's why it's worth taking the time to talk to a lender to go over this information to see what's required up front so that you know what is needed in order to refinance if you plan on taking advantage of where rates are. So those are the primary things that you're going to need: W-2s, bank statements, tax returns if you're self-employed or receive that income from self-employed. You're going to have to provide a copy of your driver's license in most cases. And then there's additional, loan application disclosures that have to be signed in order to get the loan process moving forward. So you've got to be prepared to do that information as well. Now, keep in mind, like I mentioned a moment ago, if you've been affected by what is going on in the current environment, a loss of income, you've been furloughed, you've been unemployed for some period of time, but you're receiving unemployment income, you can't use that income in order to qualify for your mortgage. And that's another reason that you want to talk to a lender, especially if you've been in one of these positions where you've had a loss of income, your income has changed for any reason. In some cases, maybe you filed for forbearance on your mortgage, or maybe you filed for forbearance on a car or a student loan or a credit card. That's why it's important to have a lender review this documentation, because if they don't fully understand it, they can run it by an underwriter at a company and have the underwriter review it to find out if there's additional documentation required. Now, can you refinance if you filed for forbearance or if you've been affected by the current pandemic out there? And the answer is yes. They came out with guidelines. Fannie and Freddie came out with guidelines probably just 4 or 6 weeks ago at this point that said that if you filed for mortgage forbearance, you still are in a position to refinance or purchase a new home. The key is that your loan has to be reinstated. What does reinstated mean? That means that your payments have to be current with your lender. That means that you've either got to be set up on a payment plan, you've had to pay a lump sum, you've had to agree to the deferral option, which allows you to take those missed payments and add them to the back of the loan. Whatever that option is, you've come up with some sort of agreement with the lender to repay those missed payments. From that point, you have to have 3 consecutive months payments made on your mortgage in order to refinance. So that would mean that, today is the middle of June, that say, for example, today you reinstated your loan and you could pay June's payment. You could pay July's payment and August payment. That's 3 months. That means after you make your August payment, essentially you would be in a position at that point to refinance your mortgage. Now the question comes, can you refinance if you filed for forbearance on other options like car payments or student loans or credit cards? Are you still in a position to refinance your mortgage? Maybe you didn't file for forbearance on your mortgage, but you filed for forbearance on those other options. I've been told that some lenders are allowing you to refinance your mortgage even if you have forbearance on the other options. I've been told that some lenders aren't allowing it. So it sounds like it's a case-by-case basis. You might have to explain your income situation and exactly what happened in order for your lender to allow that to take place. So that's another reason that you want to have these conversations up front with your lender now so that you know what to expect if you're planning on doing this, whether it's now or waiting for rates to go lower in the future. But to get back to my point, should you refinance now or wait till later? I would always tell you to take advantage of what's out there. You don't know what the future holds. We don't know if there's a second wave of this coming. We don't expect the world to be shut down again, but there's a chance that could happen. If you would have told me this could have happened the first time, I would have said there's absolutely no chance that the world could shut down like it did. And it did. So there's always that second chance that it happens again. So if you can take advantage of rates now and lower your payment now, I would take advantage as long as it makes sense to you. But at the same time, if you're one of those people that want to wait, just make sure you're talking to your lender, providing them with the documentation that's needed now so that when rates get to where you're comfortable with, you can take advantage of them. And lastly, if you filed for forbearance and you're interested in trying to refinance, just know that you've got to reinstate your loan, make those consecutive payments in order to even be considered for refinancing. That's also a conversation you can have with your lender. And if your lender can't answer any of the things that I just talked about, you need a new lender. So again, I'm networking with top agents, top mortgage brokers all across the country. If I can guide you in the right direction and refer you to somebody, I'm happy to do that. So please do me a favor and reach out to me directly or comment below. And if there's a topic you want me to touch on, even something in this video that I didn't elaborate on or another subject, you can reach out to me directly and I'm happy to do that as well. But as always, I appreciate your time. I appreciate your support, appreciate you watching, and we'll see you again soon. Have an awesome day. Bye-bye.